I'm going to try to do a good job here. First of all, I would like to thank the Council of Americas. I think events like this are what's going to bring Argentina back into the world. Argentina has been separated for a lot of years. I think events like this constantly continue attracting investors, not only local investors, of course, but international investors. Also, I would like to thank our very distinguished guest. I imagine you guys had a very easy night. Why not? With me here today is Gabriel Spiegel. He's partner and senior portfolio manager of Marathon Asset Management. Amer Bizat, who's senior emerging markets portfolio manager for BlackRock. And David Sekiguchi, who's co-founder and principal of QFR Capital Management. Before I start asking questions, let me tell you this. Yesterday, I was writing a lot of questions for this panel. I woke up this morning, I said, okay, 95% of these questions make no sense now. So I think I'm gonna echo Martin Schubert with this question. So I think we should start with what's the weight on Brexit, how this impacts Argentina and just emerging markets in general. So Gabi, if you want to start maybe.
Sure. Well, first of all, thank you, Council of Americas, for inviting me and being honored by my co-heads here at the panel. When we woke up this morning, we had a new paradigm shift, right? I mean, it was kind of unexpected, I would say. The market were not fully expecting this kind of outcome. But I don't think it's a coincidence. I mean, Brexit is part of a move that we probably heard about it over the last few months, but it's been the factor of foreign policy, political crisis in Europe, and economic burden. We are living in a very dangerous world, and we noticed that this morning when we woke up and markets were down 7-8% in European equities. Our markets were kind of no bid. And I would quote, I will be a little bit away from Brexit, but I will quote a Wall Street hedge fund legend, and just to frame a little bit the question. And what he said is, the Fed has no end game, but the markets do. And what we heard about over the last maybe few years, this reflation of assets, where we heard about the TINA, the acronym of TINA, there is no alternative but to buy equities and so. And we've seen lately a massive reflation of assets, which is consequence of the extraordinary monetary policies that we're seeing around the world. And today, when we looked at the NIRP policies, which is negative interest rate policies or zero interest rate policies, $10 trillion of debt, they trade negative rates around the world. So hence comes engaging where Argentina fits into it. So the investor community, ourselves, we welcome one more participant into the global markets, which is when I say that we have a very dangerous world out there, we welcome a situation that is an improving story, which is confidence, gives confidence to investors, and creates another alternative for investments, which we really lack of, kind of things. And I leave it like that.
Okay, thank you very much. Ahmed, do you want to?
I mean, I was extremely eloquent, so there's very little to add, except to point out sort of, if you stepped up this morning as well, and I was of two minds, right? On the one hand, one can easily think of this event overnight as one that is cyclically extremely limited, right? It's the impact is on a relatively small economy, and the impact on global growth is going to be fairly limited. But there's another way of looking at the situation. This is a seismic move, right? I was thinking about it this morning. We may well wake up 10 years from now and say that this is the moment in which globalization actually died. Right? It's been a very sick patient for years now. And finally, we got to the moment where the whole project, the whole post-Second World War project, the one that was built on the notions of multilateral engagement, of countries coming in together, freedom of capital, capital mobility, labor mobility, trade, that today, the event overnight was one in which a very large player decided to say, no, I want to be parochial. I want to go back and look inward looking. Long way of saying short term, it's not clear to me it's going to have much of an impact. It's not going to have much of an effect in terms of the things that we watch on a day-to-day basis. But medium term, this is the kind of thing that it is going to introduce a risk premium that it will be lasting. And that will have implications for emerging markets. The whole narrative around which was built on this post-Second World War notion of multilateral engagement and the liberal project, as it were.
Thank you very much, Amr. I think some people are going to quote you on the sick patient matter. David, can maybe you give us your view on this?
Yes, I think we are going to see episodes of this type of political tension, which can lead to isolationism, like what happened overnight, or other expressions more in the future, because we are in a global economy which is really struggling with some long-term factors, demographics, etc., and that creates economic malaise, and deflationary pressures are fairly strong. And that economic malaise and sectors that in the globalization, as I think was embedded in Amr's comment, there are losers and there are winners, and we haven't found appropriate mechanisms to compensate the losers for this. Creates a political anger that we see it manifested in this country, we see it manifested in Europe. Britain is to some extent fairly particular. I wouldn't be surprised if they actually end up doing relatively well on their own, but this is not the issue, I think. The issue is that this tension is going to continue, and when it relates to Argentina in particular, and emerging markets in general, on the one hand, probably, as Gabi said, we are going to continue to have very stimulative policies, not because they're necessarily effective. It reminds me of the joke of the drunk person that lost his key, and he was looking at night, he was looking under the public light, and someone comes to help. Did you lose it here? No, but it's the only place where I have some light, so I cannot look anywhere else. So monetary policy will continue. We don't know really whether negative interest rate policy has is going to create any benefit, but that's going to, in the short term, as Amr also was saying, maybe helps commodities. And as in the discussion between Larry Fink and the minister this morning, they said in relative terms, and I saw also on the real investor panel, emerging markets can benefit in relative terms, but it brings me back to economics 101, and when you have to understand the income effect and the substitution effect. The substitution effect maybe helps. The income effect, I think, is likely to be stronger and is not very encouraging.
Thank you very much. I think the new administration has focused on pro-market policies, right? To bring back market confidence, market investors, international investors. Something I can say from our side in Puente is we used to do investor trips where we received 10 investment funds from abroad every 45 days, every 2 months. Now we're receiving 20 funds every 10 days, 30 funds every 10 days, which is incredible. I think that's speaking about the momentum that Argentina is living. But a question I ask myself, and a lot of times people ask me is, okay, Argentina is going through this incredible momentum. The minister had said today all the figures. What can upset this story? What are you guys looking at saying, okay, if these actions happen, then this is a very bad news for us? Maybe Gabi, you want to start with this?
I hear a lot about the deflation effect of the measures or the ending of the honeymoon. To be honest, I mean, when you start or you finish a honeymoon, you had signed a marriage contract before. And to do that, you commit, and you are committing yourself for the long term. So, yes, of course, I mean, the honeymoon is a great thing to happen, but when you commit to form a family, to build around your family for the long term, you're building up a long-term relationship going forward. And that, I think, it gets to the point that people get too anxious about policy making in Argentina. There has been what I called a two-speed approach of economic policy. The first one was the first gear was to get the holder resolution done, which was done fantastically, and then the lifting of the restrictions in the FX. Those two things, they got done in less than 3 months or 4 months of the administration. So you have to give this administration credit for really speeding up measures that a lot of market commentators or a lot of economists per se, they thought that they were very difficult to implement. And they did it in 3 to 4 months. Now, the second gear that you are putting in place, it's more gradualism. And it's getting to the point of where the market participants get anxious about when is the fiscal policy gonna start kicking in on our way? When is the inflation targeting geared to the target? And to start looking forward the next long-term investments that you're planning to do. So I think, first of all, the things were done. Second of all, you need to have a little bit more patience to go through things. So that's all.
Thank you. I completely agree. I think the government has done a fantastic job in the beginning. They do two extraordinary issues very fast, the free float of the exchange rate and the holdout situation. But a lot of people ask us, is fiscal consolidation and the way they're managing it today in a gradual way, is that the best way for investors? So maybe, Amr, let me ask you this question. What do you think is the impact on the current fiscal and monetary policies in the investment environment?
Absolutely. Thanks for the question. And I was sort of, when you think about the metaphor, you're asking us about the divorce before you ask us about the marriage. So,
Trying to be positive.
No. The way I sort of think about it, and it's very similar, or at least in the same line as what Gabi was saying, is that this is a set of policy